All right, guys, welcome back. In our first video, we talked about candles, opens, closes, highs and lows, and what that means for price trading inside a very specific time frame, whether that be a daily, 4-hour, 1-hour, weekly, whatever chart you're looking at. The candles represent the same thing, the price action that occurs inside of that given time frame. Now, what we haven't gone over yet, which we're going to dive into today, and I'm going to break this video down into a couple ones where we can learn this and kind of take this in chunkable bits of information, is when we have candles, that represents human emotion as it's occurring. What we have after a candle is formed are things that they're just candle patterns. Now, there are 4 main candle patterns that matter. They're rally-based rallies, rally-based drops, drop-based rallies, and drop-based drops. Okay, so today, what I'm going to cover is a drop-based drop. That is a period of down movement in the market where there is a consolidation that occurs and then the sellers continue winning, and why that matters. And I'm going to show you inside of a real trade why that matters. So this is one of the levels that we look for. Now that we understand what candles are, now we're going to start diving into candle patterns and how that human emotion and human psychology plays into it. So I think you guys are really going to enjoy this video. Part 1 is levels. When we look at a chart, there are really 4 main candle patterns that we look for. They are a drop-based drop, a rally-based drop, a rally-based rally, and a drop-based rally. Now, these 4 candle patterns that you see on your screen, they represent the largest imbalance of buyers and sellers in the markets. And guys, as traders, we want to trade right along with those imbalances. I always say that a chart that you see on your screen, all it is human psychology depicted in the form of candle patterns. And when we can find these candle patterns that represent the largest imbalance of buyers and sellers, we can trade with that human emotion and that human psychology. All right, traders, so the first one that we have for you is a drop-based drop. And as you can see here, I'm on the Euro futures. And guys, to start, what I want to focus on is the trend. And you can see this is a daily chart indicated by the time frame that we have selected up here inside of our Thinkorswim platform. But we have lower highs and lower lows across the board. So when we have that type of movement and we have to pretend like we don't know where price is going to go. So we identified this area of opportunity here, but we had no idea, again, where price was going to go. So we had to look at our level odds enhancers and our stacking the odds studies. And the very first thing that we look at, guys, is trend. And on a daily trend, we have these lower highs and lower lows. So if I want to be a trader on a daily chart, the most prudent and the highest probable thing that we can do is trade along the lines of least resistance, and that is to get short. And this is our drop-based drop. Now, what happened on that trade? We continued downwards, right? And you guys can see on the screen right now the P&L that we got on this trade. So, see, all candle patterns, those drop-based drops, rally-based drops, rally-based rallies, and drop-based rallies, they're not all created equally. It's not the time frame that matters. It's what those patterns represent. That is the key to successful trading. Over the last 13 years, I have developed a scoring module that looks for 7 key level odds enhancers. We use our scoring module to help us determine whether or not we're allowed to take the trade. Now, notice I said the word allowed. Again, not all levels are created equally. So if we don't score a specific number on our 7 level odds enhancers, we're not allowed to take the trade. We also look at 5 what we call stacking the odds studies. Guys, number 1 is trend. And what most traders fail to realize is that trend is relative to the time frame that you are trading on. So many people do this wrong. Number 2 is RSI, how we use it and why we use it. Number 3 is our Fibonacci retracements, when we can use math that where our levels coincide with the math of the Fibonacci sequence, that can also give us an edge. Number 4 are critical areas. It's one of my favorite things in trading that I use on every single trade. And guys, number 5 is our exponential moving average strategy that we use. Each one of these stacking the odds studies, they all play a role in our trading. So guys, as you can see, this type of level matters. A drop-based drop is one of my favorite trades to take in a downward market where we can take advantage of prices moving down. Now, if you guys want to learn more about this, I encourage you to go to tradelikenick.com. That's going to allow you to join inside of our inner circle, get some of these trade recommendations, start to learn how to implement everything that I'm showing you here. So again, tradelikenick.com. And on the next video, we're going to go into a couple different other candle patterns that we can take advantage of, also in downward markets, but also to the upside. So again, 4 main candle patterns that we look for: technical analysis, identifying where buying and selling is occurring in a tight formation, and then one of them wins, and we want to trade right along with those imbalances. So hope you guys enjoyed this video, and I'll see you guys on the next one.